Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia, one of the world's largest wheat exporters, plans to impose a higher export tax on wheat from March 1, its economy minister said on Friday, in another push to curb a rise in domestic food prices triggered by the COVID-19 crisis. Wheat prices in Chicago and Paris jumped after the proposal, which the Russian government has yet to sign, on expectations the higher tax could make buyers prefer wheat from other countries. Traders say Russia's move will drive up the cost of wheat in importing countries when the pandemic has already reduced incomes, making the world's poorest especially vulnerable to food poverty.
A perfect storm of freezing temperatures and a supply-led gas price rally has stoked thermal coal demand, with prices at multi-year highs, reminding power suppliers and consumers that its appeal won't fade in a straight line. The Northern Hemisphere weather has highlighted coal's relative endurance, some 200 years after it was powering the first industrial revolution, even as several countries abandon the fuel to decarbonize and meet climate change targets. In Asia, liquefied natural gas, LNG, supply issues and cold weather have sent prices rocketing, pulling US and European gas prices higher.
Moving on to the top news in the energy sector.
Oil prices fell more than 2% on Friday, with both contracts posting a loss on the week as concerns about Chinese cities in lockdown due to coronavirus outbreaks tempered a rally driven by strong import data from the world's biggest crude importer. Brent fell $1.32, or 2.3%, to settle at $55.10 a barrel. U.S. West Texas Intermediate crude CLC1 settled down $1.21, or 2.3%, at $52.36 a barrel. Both benchmarks, which hit their highest in nearly a year earlier in the week, posted their first weekly declines in 3 weeks, with Brent down 1.6% on the week and U.S. crude down about 0.4%.
Pakistan and Bangladesh are rationing gas and buyers across South Asia are seeking alternative fuels after spot liquefied natural gas prices surged to record highs, government and industry officials told Reuters. Spot LNG prices have nearly tripled since early November as freezing temperatures across North Asia boosted demand and depleted inventories. Since July, prices are up a dizzying 1,000%. Gas-fired power plants and industries across the region are scrimping on gas, with the scramble for other fuels driving up demand for liquefied petroleum gas and residue oil.
Moving on to metal price moves.
Indonesia plans to adjust its royalty payment policies on sales of gold and coal in an effort to boost state revenues as prices of the two commodities recover, an official said on Friday. The world's top exporter of thermal coal expects a recovery in prices and exports this year after scoring a $1.5 billion trade deal with China. Home to the world's biggest gold mine, Indonesia also ranks among the top producers of the precious metal, benefiting from a price rally last year. Indonesia now plans to revise coal royalty payments to a system based on both calories and market price, as opposed to just calories now, Ridwan, the Director General of Minerals and Coal at the ministry, added.
Copper prices dropped on Friday and zinc touched the lowest in nearly 2 months as investors trimmed some of their bullish positions on the back of rising coronavirus cases around the world that threaten economic growth. Data on Friday showed Britain's economy shrank in November for the first time since the initial COVID-19 lockdown early last year, while the number of coronavirus infections in Germany rose above 2 million. 3-month copper on the London Metal Exchange was down 1.3% to $7,945 a ton by 1700 GMT, having risen earlier in the session to a 1-week high on U.S. President-elect Joe Biden's $1.9 trillion stimulus plan.
We will now look at the top news in the agricultural sector.
Brazilian soy traders CJ Selecta, Caramuru and Imcopa have committed to zero deforestation in their respective supply chains, adding pressure on larger traders to accelerate environmental commitments. Their pledge involves a ban on trading soy grown on land deforested after August 2020 in all of Brazil, going beyond the previous agreements among traders that only applied to the Amazon rainforest. Patricia Segui, CJ Selector's sustainability manager, said the three are part of a group promoting soy sustainability, adding the move to eradicate deforestation from supply chains immediately is an answer to demands of civil society. The three companies mostly supply Norway's salmon industry. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.